Scared.
Welcome to the Butcher's Think Tank. Today we're going to discuss the collapse and bankruptcy of Sri Lanka, the financial and macro implications that has on the stock market, equities, bonds, real estate, and the rest of the world. In addition, we'll discuss sales by Joe Biden of our U.S. strategic oil to a Chinese-owned gas giant. We'll discuss BBIG and GME, Tide dividend and GME stock split dividend, and the financial implications of the over-leveraging of banks in our stock market, including hedge funds, stable coins, a lot more. Let me drop a quick tweet out here. Let everybody know we're live. No farmers, no food. Dutch farmers blocking roadways. Wow, that's a demonstration if I've ever seen one. Hey Martin, I think we got some background noise on your end.
Oh yeah.
Thanks,
maybe.
baby. North Macedonia. Unrest is spreading through the Balkans now. People are barely surviving increases in food and price. But, as Bernie's tweet says, we are being kept in the dark by the media, and this is not being broadcast. Same as Sri Lanka, you won't see this all over the news. Oh good, we got Reuters, and Sri Lanka imposes curfew, fire tear gas as unrest escalates. Their inflation hits 54%. That's wild. Terrible. The United States is not far behind. We're already in the high teens. wild. There you go, just got done tweeting that out there. Germany's chancellor says we're preparing for an energy deficit and we are in talks with Canada. Energy crisis abound. Biotech stocks added $200 billion in market value over the last 3 weeks after the sector got a boost from Merck and Company, interested in the drug maker Seagen. Rallied roughly 20%. A lot of it, in my opinion, short covering all around. Fitch Ratings says high inflation will begin to impact consumer spending in the U.S. Tight U.S. labor market conditions put upward pressure on the nominal wage inflation. In 40 years, the Fed has never raised rates with yield curves this flat. They're ignoring the imploding consumer and fixating on jobs. Thanks to Suburban Drone for putting out this chart. Where's the Fed funds rate going to go? Back to zero? Back to negative? Back to quantitative easing and printing more money? It's doubtful because that would exacerbate the issues that we're having with inflation. U.S. annual average inflation forecasts have risen to 7.8% and 3.7% for 2022 and 2023. The Fed is tightening expectations following a decent jobs report. It's still at 0.75%. They're going to jump another 75 basis points. What's up, Rodwan? Thanks for coming out. Jeffrey, Peter, everybody, appreciate you guys. It's good to be here with you all. Hi, Phil, for real. Jam Bams, and everybody in the think tank. I'm here with my guys, Cash, Martin, and Zoombach. And we were just discussing everything going on in Sri Lanka, everything going on with the GDP, and the downgrades. Downgrade. But Fitch Ratings has revised the United States outlook to stable from negative. That's a plus. Public opinion measures also point to a Republican win. President Biden approval rating is dropping in blue, and the disapproval is rising in red. And on the right, you have people voting for Republicans in red and Democrats in blue. I think both parties are fucked. But much like we're seeing issues in Venezuela, in Holland, for example, in Sri Lanka, with further collapses, you're going to see more and more of this happening in the markets over and over again. Another country, billions of people, millions of people every single day having to deal with things like this. And protesting and looting and stealing from the stores because they can't afford to eat. They can't afford to feed their families. No power at the supermarkets. And these people are actually paying. They're at the teller. Total collapse by the government. They cannot pay their bills. They cannot keep their energy infrastructure going. As of yesterday, according to Keen Beekst here, 200 people have been killed in Sri Lanka. The military has surrounded fuel stations to reserve gasoline for government equipment. So you can't imagine not even being able to go get gasoline for your car.
Man.
On July 4th, Sri Lanka banned the sale of gasoline to ordinary people. Military personnel guard the gas stations. And people are just standing there begging to get a fucking couple gallons. Mad Max, man. You're right, Cash. This sucks. Appreciate you, Eric. You're too kind, man. Thanks for your support of the think tank always. And everybody for joining us. %60 inflation. No food, no fuel, no medical supplies. You can't buy gasoline to leave the country. You can't buy food because you're broke. What are people going to do? Self-sufficiency is key. So just a few minutes ago, posted 39 minutes ago, the government issued curfew in Sri Lanka. They're busing in troops when citizens don't have fuel and costs are damaging so many in a huge cost of living crisis. People are trying. They're trying to protest. They're trying to make the most of it. They're trying to make the best of it. How much do you want to bet that Vladimir Putin and Russia send tons of food at no cost to Sri Lanka? I'm not saying the guy's a saint, don't get me wrong. But I bet you Russia sends tons of food, literally, to Sri Lanka. They're asking Russia for oil, of course.
Wouldn't surprise me a bit. They have done it before.
Protests in Italy. Massive protests.
The same Sri Lanka is in complete collapse, and no country or organisation is willing to sell fuel to this debt-ridden outfit. As I've told you, Sri Lanka is run by the Rajapaksa family. One of them's president. The brother was, until a month ago, Prime Minister and Finance Minister, but his son is still the Youth and Sports Minister. His lawyer is the Justice Minister. The President himself is the Defence Minister. The eldest brother is the Irrigation Minister. The nephew is the Agriculture Minister.
Wow.
The Rajapaksas have rorted the country.
Wow.
As I said last week, why the hell would we be giving $50 million in aid to a country whose government is riddled with corruption and nepotism? Around the cricket ground are a stack of empty gas bottles. Sri Lankans have assembled the bottles to demonstrate the extreme shortage of basic goods following the economic collapse. The government has banned the sale of fuel to private vehicles. There's an incongruity here. Cricket teams, broadcasters and tourists, on the one hand, looking at the sight of luxury in a country which is on its knees because democracy is dead. Economic and political chaos in Sri Lanka. The Prime Minister, Mahinda Rajapaksa, resigned a month ago, replaced by a permanent and divisive figure in the Sri Lanka, well, he's been in Sri Lankan politics forever, Ranil Wickremesinghe. Now, in a speech to Parliament last Wednesday...
Does that sound familiar to people with what just happened in the United Kingdom with Boris fucking Yeltsin, let's call him, because he's a fucking clown?
Wickremesinghe said that the state-owned Ceylon Petroleum Corporation was US $700 million in debt, which prompts the question, who's been ripping it off? Wickremesinghe told the Parliament, as a result, no country or organisation in the world is willing to provide fuel to us, fuel to Sri Lanka. Can you believe it? But there's now a 4-day working week for public servants to allow them time, cop this, to grow their own food crops, presumably starve in the meantime. The World Food Programme has issued a dire warning about Sri Lanka that nearly 5 million of its citizens, 22% of the population, are food insecure and in need of help. So where's all the money gone?
Very similar to the things that we've seen with Ukraine. Now, don't get me wrong. Don't get me wrong. I'm not anti-American, but we do have to keep an eye on every side of the situation here. Massive money laundering schemes have been occurring in Ukraine for decades, especially since, well, the current Ukrainian President Zelensky was installed. Here's the Ukrainian MP on his yacht with hookers in Dubai. That's where that 40 billion goes. Here's the one I was looking for. The wife of a member of parliament of Ukraine was caught last week trying to cross the border to Hungary with 20 million US dollars and 1.3 million euros. And I looked into it, and they don't have that kind of money. If they did, she wouldn't be trying to smuggle it across the border into Hungary. American money, US dollars. And just today, July 8th, Biden announced another $40 million to go to Ukraine. You heard that. On top of the $400 million from earlier last week and the $40 billion from the week before that. I don't know, I bet that picture's not the same one I saw 5 months ago. I know I saw a lot of other pictures from 5 months ago that I've showed on this channel about Ukraine. Check it out. Gold withdrawals continuing today. Open interest on gold is equivalent to 150% of all the vaulted gold and 298% of the registered gold and warranted metal used for future deliveries. The price suppression is everywhere. It's on gold, silver, meme stocks, you name it. And we're going to talk about how they do that as well. Open interest on silver is equal to 205% of all vaulted silver, 1,020% of all registered silver. And registered silver is at its lowest level since June 18th, 2018. There's some things I'm not even going to talk about because they're not worth talking about. But this is the amount of people who now hold 2 full-time jobs is at an all-time high. This is from 2000 all the way to 2022. Previously, the high was the dot-com bubble of 2000. And then after that was 2017, 2018. We surpassed that in 2020, and now that's even higher in 2022. There are more people than ever that have 2 full-time jobs to try to support their families in the United States because of the rampant inflation. The inflation that's caused by the over-leveraging by hedge funds and cryptocurrency lenders like Three Arrow Capital. That's an old one. We've been telling you guys about this one for a month, as you can see that. Try to give people as many warnings as possible. My most recent favorite is the fact that Berkshire Hathaway stands to lose $6 billion from unsecured loans that it made to the crypto hedge fund Three Arrows Capital. Go back to my tweets so I can show you guys the other news. $150 transactions involving Hunter Biden and James Biden's global business affairs have been flagged by United States banks for review. Berkshire Hathaway, again, stands to lose $6 billion. This was really interesting. I don't know. I just came across this when I was trying to log into my brokerage. And it said select all the squares with a little bitch. So I selected all of Kenny G, and it gave me the thumbs up verification that I am a human. So I thought that was pretty fucking awesome. The state of Wisconsin is removing election drop boxes. This should eliminate the election drop ballot farming that the Democrats used to win the 2020 election. Love me or hate me for it. I don't really care. The fact is, we're going to bring you the most real news possible. And that includes the fact that the Democrats paid people to drop at different locations and take pictures of themselves dropping off ballots all around the country. Records obtained by the Associated Press show an Arizona woman was indicted in 2020 on accusations of illegally collecting ballots. She apparently ran a sophisticated operation that partially relied on her status as a well-known Democratic operative in the border city of San Luis to persuade voters to let her gather and, in some cases, fill out their ballots, according to records obtained by the Associated Press. And, of course, you share something like that and it only gets 4 retweets and 30 likes.
Taken that action yet.
So, ma'am, pro-life Americans want questions. Pro-life Americans want have questions. All the questions you're taking are pro-abortion. So let me ask you this question. Senator Marco Rubio is demanding the federal government not provide sick leave to federal employees who travel to get abortions. He said that would violate the Hyden Act. So what's your response?
Sir, take a seat in the back. You're being rude to your colleagues and our guests. Go ahead, take
I'm not
the
listening to the
question.
press. I can stand right here and ask my questions.
The president,
Taken that action yet.
You try to ask a tough question, and you're met with, sir, take a seat in the back. You're being disrupted.
Black Americans have questions too. All the questions you're taking are pro-abortion. So let me ask you this question. Senator Marco Rubio is demanding the federal government not provide sick leave to federal employees who travel to get abortions. He said that would violate the Hyde Amendment. So what's
Sir,
your
take a
response
seat
to
in the
that?
back. You're being rude to your colleagues and our guests. Go ahead, Kate.
I'm not listening.
They treated him like Rosa Parks. Go to the back of the bus. You can't be asking these kinds of fucking questions. And he said no. He said, I'm going to ask whatever the fuck I want. All you're taking is pro-abortion questions. How about you take some real heavy hitters? This is our administration. And nothing will change until people demand change. That's the only way things are going to get better for any of us. People have to demand change.
5 days to action.
Meanwhile, you got meme stocks, heavily shorted meme stocks, beginning to run. About 35 days or so after the failures to deliver, we're reaching record high levels again for stocks like Clovis and AMC and GameStop. For example, AMC dark pool trades reported today were 63% of the total volume. Shout out to my friend, the Average Ape, on YouTube. I'm sorry, on Twitter and in the think tank. Over the past 20 days, average dark pool volume has been 55%. Total volume in dark pools, 11.5 million. In addition, speaking of Executive Order 13959 as amended and 14032, United States and Chinese officials have held phone calls in the last week to further negotiations aimed at keeping about 200 Chinese stocks from losing their listings on New York exchanges, per Bloomberg. Currently, market makers and hedge funds, broker-dealers, and family offices are able to maintain all of their collateral in these Chinese junk stocks, and the military and companies that finance People's Republic of China stocks. They did take a massive collateral haircut, but they're still able to hold them, which is why we saw a large increase in price on stocks like AMC and GameStop right around June 3rd. A large being, about 20 to 30% or so in a matter of a day. And then the stocks were shorted back down because they're able to maintain this collateral, and these stocks are currently not being delisted, at least not yet. And this is per Bloomberg. So if that does occur, you can bet your ass that all of that collateral, even with its current haircut, will get a 100% haircut, meaning it'll be unusable and worthless for ISDA and all the other players out there. Currently, ISDA is still accepting this Chinese collateral. For those people that are unaware, GameStop's CFO did not resign. He was fired because he was dead weight. and they replaced him with somebody who actually understands. It was the company's CAO who understands GameStop's financial and future much better. In addition, GameStop is laying off some workers, as well as from their Game Informer magazine, which they own. And I think that's a great move. As we saw just last month, there was 26,000 layoffs in the tech sector for the month of June. And that's something that's going to continue because companies need to trim the fat to maintain profitability. Quite simple. It was a very smart move on their part. But even still, the stock managed to get shorted in the afternoon, as that was heavily yesterday, to bring it down back in price a little bit after GameStop announced the dividends and such. Crypto exchange blockchain.com faces $250 million in losses on loans to Three Arrow Capital. In addition, you've heard of other companies we talked about, like Celsius, that have taken massive damages, as well as Voyager, that's filed for bankruptcy. In addition, Spanish exchange Together has closed down entirely, citing a lack of resources and the crypto winter. 100,000 people have lost all of their money on the Spanish exchange, crypto exchange Together. Ladies and gentlemen, when I tell you that the dominoes are falling, it's not because I enjoy saying that stupid, terminology, for example. It's because it's probably one of the easiest to comprehend explanations as to what's happening. That's a long row of dominoes between crypto and equities and bond markets and real estate, but they're all combined. In addition, with companies like Evergrande Real Estate and all the other Chinese developers that are currently going fucking bankrupt. Then you've got stable coins like Terra and cryptocurrency brokers like Voyager and Celsius. And then you've got other exchanges like Together going bankrupt as well. CoinDesk, it's just going to keep going and going. Then you've got the U.S. and Chinese officials basically negotiating, trying to keep 200 Chinese stocks from losing their listings on the New York Stock Exchanges, per Bloomberg. At the same time, the plunge protection team is doing nothing but pushing currency swaps in order to maintain the VIX at lower levels and create higher pressure on the SPY. They're basically spoofing the market in a legal way by selling currency swaps and reversing them. It pumps the SPY, it pumps the US dollar at the expense of the Canadian dollar, the euro, etc. The ruble. And even still, the ruble's at the strongest level it's been since 2014 because Biden's sanctions and the euro sanctions against Russia have completely backfired, as we told you they would when they fucking issued them months ago. You can actually view the swaps for yourself. If you want, you can chart the US dollar and the ruble, and then the US to Canadian and oil. Put them on the 5-minute chart, include the overnight session for the past 36 hours. Now that would be the past 48 hours, and you can actually watch the currency swaps play out for yourself. I've been seeing them almost every single fucking day, and it's a form of manipulation on the volatility index in order to pump the SPY, because oil's inflationary. Bond yields increasing to fight inflation makes the VIX go down, and the VIX going down makes stocks go up. A gamma ramp on the SPY. Volume trading, algorithmic trading. That's the most simple way that I could possibly explain it. JP Morgan was misreporting swaps. They received only an $850,000 fine for misreporting 2.1 million swaps. ISDA allows this to happen, thanks to my man Randall Cornett, but we already knew about it. We talked about it on this channel, but thanks for him for highlighting all this and putting it out here beautifully on Twitter. $850,000 fine is nowhere near enough. But it's swaps like these that JP Morgan just paid a slap on the wrist for, that are short-dated foreign exchange swap transactions that were misrepresented approximately 51% of the total number of FX swaps that JP Morgan executed during that same period. More than fucking half of all their FX swaps. And these are the same things that Bill Hwang did from Archegos, and that's why, as of yesterday, 3 JP Morgan traders are facing 15 or so different counts of fraud. And what's going to happen? Probably jail, house arrest, just like they did in the past. And JP Morgan will pay another small slap on the wrist fine. This just came out yesterday. Former JP Morgan's big hitters of gold market face trial over spoofing. JP Morgan dominates precious metals, blah, blah, blah. Michael Novak, he's literally considered the most powerful person in the gold market. And he was the managing director of JP Morgan, ran their precious metals business for over a decade, making hundreds of millions of dollars in profit trading, everything from silver to palladium. Now, he and 2 of his former colleagues face a federal jury in Chicago on criminal charges for thousands of spoofing trades, which prosecutors say were used to generate illicit gains for JP Morgan and its top clients. In 2020, JP Morgan paid a record settlement to resolve spoofing cases against 15 other traders. They paid $550 million. These guys got basically a slap on the wrist and a 1-year house arrest. In 2015, they pled guilty to felony antitrust laws. And they had to pay $60 million for intentionally manipulating prices of precious metals and options and spoofing. In addition, only recovering 7% of the estimated $915 million of damages. So they do $915 million of class-wide damages to retail investors like you and I. Yes, you and I. And then they only have to pay about 7% of that. But we didn't get that money back. Who gets that money? The United States Treasury. And then they use it via the Plunge Protection Team and the Economic Stability Fund. They give the Economic Stability Fund to the New York Fed. And the New York Fed, on behalf of the Plunge Protection Team, issues a trade to sell, for example, $50 million of shorts on the volatility index in order to pump the stock market. These are our tax dollars at work.
Totally manipulating.
The trial comes after years of a U.S. government crackdown on price manipulation that saw JP Morgan pay $920 million to settle spoofing claims 2 years ago. In 2021, 2 Bank of America traders were convicted in Chicago. A year earlier, a jury found 2 from Deutsche Bank guilty. It just keeps happening over and over and over again. And the government keeps giving these banks trillions and trillions of dollars in bailouts every single year since 2008. Including today. Today alone, the RRP was massive. And I'll show you exactly how much, and I'll tell you how much they fucking made in profit. Well, I should have clicked desk operations. What? Okay, everybody. The Federal Reserve Bank of New York has taken down their website for the RRP. For site maintenance. If that doesn't sound like some bullshit to you, it sounds like some bullshit to me.
Convenient.
How convenient is that we can't check the Fred RRP today because it's down for maintenance?
Oh man, we should give them more money.
Yeah, apparently they need it.
Oh, the rest of the website's working fine. Oh, the rest of it.
Yeah,
But you can't check your Soma holdings
money
either.
For tech support.
Fucking assholes. Yeah, the rest of the website's working just fucking dandy. No problem. Fucking pricks. Oh, wow. Ladies and gentlemen, a prime example of our tax dollars at work. Somebody had it earlier and I saw it. I saw it on Twitter. But before we move on there, the RRP, by the way, people, today was about $2.18 trillion on 97 counterparties. I saw it earlier. I remember it off the top of my head. All that really means is it continues to rise. at high levels. It's not at an all-time high because the all-time high was at the end of the last month, because that's when banks needed to cook the books the most. And that would put us at like around 2.22. And we actually did beat that all-time high once already this month, July. And that was $2.228 trillion on 103 counterparties. Wow, how do I remember this shit? You'd think I looked at it every day. The VIX traders are piling into bets that fresh stock pain is ahead. Options hedging returns after losing favor amongst the pros. And VIX hedging hasn't worked like you'd expect because these assholes keep shorting the VIX. Naked shorting the VIX, and the U.S. Treasury has failures to deliver because of that. As you can see here, pushing call to put ratio on the VIX is at the highest it's been since 2020 collapse. That means that more investors like you and I, and retail, and institutional investors, and market makers and such as well, are putting their money into calls on the VIX. A 6-to-1 ratio of calls to puts. That, my friends, is indicative of a recession finally starting to get priced in. It's got a long way to go because remember, the stock market does not follow the economy. One thing that is pretty bullish from Representative Maxine Waters, I will say that on July 19th, Maxine Waters' committee schedule for the House Committee on Financial Services will be discussing at 10 a.m. Eastern Time with the Subcommittee on Investor Protection, Entrepreneurship, and Capital Markets. They will convene for discussion for a hybrid hearing entitled Oversight of the SEC's Division of Enforcement. Oversight of the SEC's Division of Enforcement. So, Representative Maxine Waters, at the very least, and the House Committee on Financial Services will be putting a spotlight on the SEC's Division of Enforcement, to be specific, and the oversight of their actions. And that's actually a good thing because we need a lot more of that. At the very least, they're talking about something worthwhile. Props to her on that. Now, you guys want to talk BBIG and GME? We should do that, as well as AMC real quick, even though I've delved into them a little bit. All right, here it is. Three pension funds, allege that big brokers run a cartel that extracts unfair profits from stock lending as of June 30th. Right, and they're basically saying that 5 of Wall Street's biggest brokers have wrung unfair profits to the tune of $2 trillion. $2 trillion for loans, stock loans, which are a key part of short sales and options trades carried out by hedge funds. This is what we always talk about as like the cost to borrow and such. These are those shares of stock being loaned. When a hedge fund wants to short the shares of a particular company, it first borrows those shares from long-term investors, such as investment firms, pensions, and endowment funds, and insurance companies. The prime brokers sit between borrower and lender and have exclusive knowledge of both share inventories and trading strategies. The suit alleges that they abuse this position. Ladies and gentlemen, we have pension funds now suing market makers and banks, biggest brokers, for doing the very same thing in the stock market in general that we're seeing happen on AMC, GameStop, BBIG, all the meme stocks, silver and gold, etc., etc. Stock lending is one of the last over-the-counter financial markets in the U.S., and its opacity has been called a quote-unquote market failure by the U.S. Securities Exchange Commission. This asymmetric information between those in the center of the lending market and those on the periphery may lead to inferior terms for those in the periphery, said the SEC in December. The prime broker defendants abuse their central positions to skim profit from both lenders and borrowers, says the antitrust complaint filed by 3 pension funds in Manhattan's Federal District Court in 2017. And on June 30th updated July 7th here, on June 30th, a Manhattan federal judge, Sarah Cave, recommended the class action status for this antitrust case. So, everybody pile into the lawsuit against Goldman Sachs, UBS, JP Morgan, and Bank of America. I mean, I'm not an attorney, so talk to your attorney about it. You know, I'm not giving you legal advice of any sort or financial advice of any sort. Just trying to give you an idea of what's going on. And looks like people are very pleased with the Judge Cave's ruling on the class certification. And looks like the attorneys are very much looking forward to litigation against those banks to maximize recoveries for the benefit of class members, they said. So that's actually a really good news, particularly if you're a pensioner and you've lost money. You know, retail investors are getting fucked. But guess what? 7 large quant funds opted out. Want to know why? Watch this. Here comes exactly what you need to know. Where's it at? Economists working with the plaintiffs told Judge Cave that the prime brokers' grip on stop lending had damaged pension funds by at least $5 billion and hedge funds by over $2 billion. Although antitrust plaintiffs seek damages on behalf of the hedge fund industry, not every fund wanted part in the case, right? Why did not every fund want part in the case? Watch this. Pretrial discovery was stalled for months in 2020 when lawyers representing 22 hedge funds told the court they feared that their proprietary trading strategies would be exposed in the stock loan records. In the stock loan records the plaintiffs were getting from the prime brokers records. Yeah, anonymizing procedures were established, but even then, 7 large quant funds opted out of the case, including Citadel LLC, 2 Sigma Investments, Renaissance Technologies, and D.E. Shaw, amongst the others, out of a total of 7 of those hedge funds. They knew that if pretrial discovery comes on their trading strategies, that they would have to specify a lot of information that would tell us, retail investors, exactly what we need to know about their bad bets and their naked shorts and synthetic shares on AMC, GameStop, BBIG, and all sorts of other meme stocks. That would be in my opinion. But why else would they? Why would they want to miss out on $7 billion in a lawsuit that they didn't even have to pay for because it's a class action? Bingo, because they're crooks. Remember that guy Novak, the top dog at JP Morgan? He's facing 15 counts of commodities fraud, conspiracy to engage in racketeering, price manipulation, and spoofing, planting fake orders into the market to steer others into buying or selling at the prices that favor the bank. And then trader Greg Smith faces 13 counts, while Jeffrey Rufo, a salesman, faces an additional 2 counts. 4th defendant is scheduled to be tried separately in November. They face decades in prison. Still can't get the reverse repo, can we? Nope. But it was around 2.22 or so, 2.17 trillion. Let's see if we can't find the BBIG cost to borrow. Excellent. Here's one from late yesterday. Current fee rate for BBIG was 99.9%. Current fee rate for Tide was 91.586. The whole goal here for BBIG and Tide was to create short exemptions. Shitloads of short exemptions on BBIG meant that the market maker, like Susquehanna, was able to work with short hedge funds to drive these stocks as low as possible. Most people are finally receiving their Tide share dividends, but the cost basis doesn't make sense because of all the shorting. We've seen this happen in other stocks, and where they never had the shares in the first place and have to go in the market to buy them. But they're not able to do that here because a lot of people are holding. So we did not see a share recall on BBIG prior to the distribution date. And I'll explain why we didn't see it on BBIG and why we'll probably see that happen on GME. Instead of a recall, there were 36 million shares stayed on loan for BBIG. Why? Because 21% of BBIG is held by institutions. They hold shares as part of a fund or another investment vehicle. In addition, there's brokers that can loan out the shares of their clients, such as certain European apes, for example, that are on brokers that lend out their shares, whether they like it or not, despite turning off share lending. The real owners of those shares would want their dividend, and they're still owed that dividend, for example, Tide. But that's why you didn't get Tide at the same time, immediately. The strategy was to short BBIG and Tide as much as possible, even if the cost to borrow went up to 99%, 91%, because that would only make it from $1.13 to $2.26. That's still not very expensive, for example. So they didn't recall the shares to make it appear as if they don't need to make the price go up. The strategy is to short this Tide stock just relentlessly and buy up the shares that they need later at the discounted price under $1 or around $1 once retail traders fall off and capitulate. So yesterday there was 17 million shares traded on BBIG, and there are only around 20 million shares of BBIG or so. So that's around 80-85% of those shares. Even still, if the majority of retailers are holding it and 21% of BBIG is owned by institutions, that means those same few shares owned by institutions were traded back and forth between two high-frequency traders or hedge funds for the purposes of manipulating the stock price. They can make a real trade and then place another trade immediately after in a form of spoofing just above the next ask price. This puts downward pressure on the stock throughout the day. It results in very high volume, and for a stock that doesn't have good liquidity, because retail's holding it, like BBIG, GameStop, and AMC, it's effective at bringing the price down. It's not free, and that's why the cost to borrow goes up. But if retail sells low, these guys will be able to buy their Tide and BBIG and close out their positions. If not, the cost to borrow will continue to rise on BBIG and many other stocks. And it's a result currently of people buying and holding. See, the main issue with stock prices is that short exemptions are easy for a market maker to implement. And they're required to buy in the shares at least 5 trading days later. So they have up to 5 trading days to buy back some of those shares for that. However, then they can also use other sorts of swaps and contracts and such to try to make derivatives in order to prevent the need from that to happen. After 5 days of the stock price coming down, we're now seeing them buy in the first of the short exempts. And the more short exemptions that we see on stocks like AMC, BBIG, and GameStop, that's going to create more positive price pressure and higher dark pool volume. Do not be surprised if you start seeing BBIG get to record high exemptions over the next several weeks. And then when GameStop's dividend comes out as well, you're going to see record high of short exemption sales. Shorts sold marked short exempt because they have no GameStop shares and they have no Tide shares and they have no BBIG shares to short it. So they need to create short exemptions. And this is one of the ways that they create synthetics. Plain and simple. It's a market mechanic. They call it the liquidity fairy them very selves. Now, there are Tide warrants out there with an exercise price of $9, 20 million of them. So this could have been that there was warrants being exercised during the first few days and a few million shares getting dumped on the market. We don't know exactly, but for now, the ability to exercise something so expensive on something so cheap is not really possible for most people. It doesn't make sense. But the rate at which warrants can be exercised anyway is limited on BBIG because certain... All right, dog, chill. I'll take you out in a minute. So they can only exercise so many at a time because they can only own so many Tide shares. They cannot exercise more than 10% of the outstanding Tide shares before they have to sell them on the market, rinse and repeat, and then get those out to try to get it out to other hedge funds and market makers. On July 7th, well, it looks like Tide should be going reg show, but it has not. It has not. So that means that there was 5 days in a row, 6 days in a row when it would have been added to reg show and put us, but it didn't happen. So we're still in a T plus 35 FTD loop there for Tide and BBIG. Now this puts companies like Susquehanna and hedge funds like Hudson in cahoots on BBIG because Hudson are the ones that can only exercise that 10% of their Tide shares. They cannot own more than 10% at a time. So if they can exercise 9.9%, for example, then they can sell them on the market, help bring the price down, and they can continue, other like Susquehanna, for example, can commit wash sales between its sister companies in order to bring that price down even further. There's no specific amount of time that they can keep this up or not, but the cost to borrow and the current fee rates and the Ortex cost to borrow and such will continue to climb on things like BBIG and GameStop and AMC over time. There will be ups and downs, but you'll see it pretty much stair-stepping up on both of them. In particular, to certain things we saw, for example, the implementation of the June 3rd, 2022 Executive Orders 13959 and 14032. Now we're seeing 200 other Chinese companies about to be delisted, and U.S. and Chinese officials on the phone about these things just earlier this week, trying to keep that from happening because they know that it's going to blow up a majority of the market. That would be bad for short hedge funds because if other banks and lenders lose money, just like you saw with like Voyager and such in the crypto markets, shares are going to be recalled, shorts are going to have to cover, all sorts of things are going to happen. Margin collateral is not going to be sufficient. Margin calls will be issued by all of the major banks and prime brokers and such to their hedge funds and family offices and other shorts, retail shorts beneath them. This puts us in a great situation, sadly, at the expense of many people losing their pensions, 401ks, IRAs, thrift savings plans, and all sorts of others that are invested in emerging markets, emerging market funds, and real estate, and so on. That being said, I want to give a quick shout out to everybody for joining us here, all 1,000 beautiful souls joining us here right now, and all 20,000 plus subscribers that have joined our channel here. Thank you for opening the third eye and taking that red pill, because without taking the time to see clearly, you're going to be in the dark. You're going to be in the dark with everybody else. And I'm not a financial advisor, and nothing that you've heard today is financial advice of any kind. Either way, you haven't paid me anything because I'm not asking for payment, so it's not financial advice anyway. That being said, I personally think that a lot of people that are invested in meme stocks are going to be fabulously wealthy. And a lot of people that are invested in things like precious metals, tangible precious metals, silvers, golds, etc., palladium, even things like that. Well, not like it's tangible, but will do very well. So let's put it this way. I think we're going to be so goddamn rich. Plain and simple. If you're properly hedged.
Filthy rich.
Filthy, stinking, fucking rich. We're going to the dark side of the fucking moon, and so are many, many other meme stocks, just like they did in January and February and June of last year. And we're not going to be seeing 1,000, 2,000, 3,000% gains like we did then. I think we're going to be seeing 5,000, 10,000, 50,000% gains. We already have started to see those. We're starting to see them all over the place. And it's going to continue because a lot of the stock market rally that you're seeing today is a short covering rally. Something very similar to what we saw in January and February of 2021 when AMC and GameStop almost broke the markets because the amount of naked shorts is absolutely fucking ridiculous. And that's why some of these stocks are my absolute fucking favorite. So what I'm saying is the market crash presents an exciting opportunity for many investors if they know where to look. Don't take my word for it. Do your own fucking due diligence. But I will say that AMC is owned 90%, excluding ETFs. So including ETFs, 85% or so by retail investors. That's over 4 million people. GameStop, over 25% of the float is locked in computer share alone. And that's only a very small percentage of GameStop retail investors. So I do think it's a very exciting opportunity for retail investors. And I'm tired of pretending that it isn't. On that note, wish you all peace and wealth. We're going to be so fucking rich. Have a great day, everybody. Gonna be so goddamn rich.
I think it's time to blow this thing. Get everybody's stuff together. Okay, 3, 2, 1, let's go.
Gonna be fucking rich. I want my fucking money. Griffin, I want my fucking money. Yo, motherfucker. Diamond fucking hands. Holy shit, we're gonna be so fucking rich. I'm not here for millions. I'm here for billions with an S. Billions. Great. Damn it, we're gonna be so fucking rich.
Yeah, bird, bitch, bird.
Billions. I've decided, Cash, you can have that mansion. I'm gonna dig a tunnel. I'm gonna build mine next to yours.
Oh, you're gonna be all sneaky?
Yeah, no, that one already has a tunnel underneath it. It's fucking crazy. Later, you rich fucking bastards!
So motherfucking rich. Have a great day, everybody. We're gonna be so fucking rich. Get the goddamn money printer out.